Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided and made available through this podcast does not constitute financial general nature only and does not take into account your individual objectives, a financial situation or needs. It should not be used, relied upon or treated as a substitute for specific professional advice. We recommend that you obtain your own independent professional advice before making any decision in relation to your particular requirements or circumstances. Positive Tax Solutions and its representatives do not warrant the accuracy, completeness, or currency of the information provided on and made available through this podcast.
Good morning, everyone. Getting a bit excited ahead of myself there. Welcome back to another Wealth Coffee Chat. I'm Daniel McPherson from Positive Tax Solutions, and it's Tax Tuesday again already. All right, so today we're going to have a bit of a different chat because today's session is not about how to grow your wealth, but how to protect it, and specifically how to keep one very important party happy, the Australian Tax Office, or the ATO. Now, if you're anything like most investors and business owners, just the thought of the ATO can cause a bit of anxiety, not because you've done anything wrong, but because there's always that lingering question: have I missed anything? Am I at risk of being audited? Could I end up with a surprise tax bill down the track? And the good news is staying out of trouble with the ATO isn't actually that complicated. You don't need any fancy loopholes, complicated tax structures. You just need to keep it super simple, simple system that you stick to. So today I'm going to walk you through what I like to call the simple 3-step system to stay off the ATO's radar. And if you follow these steps, you massively reduce your risk of audits, penalties, costly tax surprises. So grab your brew and let's jump into it. So let's start with a simple question. Why does the ATO audit some people and not others? Is it random? Is it only the people who make millions of dollars, or is it just bad luck? So actually, most of the time, it's none of those. So the truth is, most people who do get into trouble with the ATO don't get there because of some giant criminal tax fraud. It's usually much more boring than that. In most cases, people get audited because of sloppy record keeping, incomplete information, lodging late, or not even lodging at all, trying to be a bit too clever with their return, or simply making mistakes that trigger red flags. So these days, audits aren't primarily triggered by human tax officers manually reviewing your return. The ATO have some really highly sophisticated data matching algorithms for their systems to scan for inconsistencies across millions of taxpayers. So all your returns get compared in effect. And these algorithms are trained to look for things like anomalies in your income or deductions compared to your industry averages, large variations from year to year, income you've forgot to declare, but they've also received from third-party data, and expenses that seem unusually high for your situation. So if you trigger enough of these little red flags, then a human may start to actually take a closer look. And the best way to avoid that, well, we'll get to that shortly, but first let's have a quick look at how the ATO knows so much about you in the first place. So I guess one of the biggest false beliefs that I hear from investors and even business owners is if I don't tell them, how would they know? And let me be very clear in that answer. The ATO knows a lot more than you think. So in fact, in many cases, they know before you lodge your return. And the reason why is because your bank reports your interest income automatically. The Land Titles Office report every property purchase and sale. Stockbrokers report your share transactions and dividends. Cryptocurrency exchanges now report all of your trades. Airbnb, Uber, all the rideshare apps all report income. Your super fund reports contributions. Your employer reports single touch payroll and your wages. And also the state government reports stamp duty, payroll tax, and land tax. And even international banks now and other financial institutions will share data through some international tax treaties. So not even is it just domestic information that they're getting, but it's also from those who have information internationally as well. So the ATO receive over 1 billion data points per year from all of these reporting sources. So they've got a detailed vision into what you earn, what you buy, what you sell, and even how you sort of structure your loans and finances. So this is why you'll sometimes hear people say the ATO already knows the answer to the question before they ask it. And trust me, they do. These days, your return's almost like a bit of a test, making sure that you're giving them the right information and being honest. So I got a couple of quick stories of actual clients to kind of give it as an example. We had a client with 2 Airbnb properties. They were managing most of the bookings through Airbnb, but had a few weekends where they rented the place out to friends through another provider. What was one of the other short stay providers. And when they lodged their return, they only declared the Airbnb platform income. So I guess unfortunately for them, the other short stay provider had already sent the full year of data to the ATO, including those the weekends that they had used it for that they'd forgot to declare. And the ATO had flagged the mismatch, which led to an audit, a bill for the underpaid tax on that income, plus some penalties and interest as well. And another example is we had a client who had been doing some crypto trading and didn't let us know about it. So they hadn't converted their crypto into Australian dollars, but they still needed to declare the gains on the transactions that they had. And the ATO received the full transaction history directly from the exchanges. They could see every trade, every gain, every disposal. And by the time we finally got involved, they'd already had all the records of hundreds of trades worth over 300K. So that client ended up with a nasty tax bill that they thought they weren't going to get. So I guess the moral of the story is the ATO isn't watching everyone in real time, but their systems are extraordinarily good at picking up these kind of errors after the fact. And once they do, it's pretty hard to argue your way out of it. So let's get to the good part, because preventing these problems is actually quite simple, and it comes down to 3 very basic steps. If you follow these steps, you'll dramatically lower your risk of an audit. You'll sleep pretty well at night, hopefully, and keep that anxiety away. So step 1 is keeping clean records. So this one's obvious, but so many people fail here. And the law is crystal clear. The burden of proof is on you, the taxpayer. So if you make a claim, you must substantiate it. You have to prove it. So for property investors, this means keeping things like your purchase contracts and settlement statements, loan documents showing original borrowings and also any refinancing history, clear separation of how those borrowed funds were used, invoices for renovations, itemized between capital improvements and repairs. So this is something that I guess we get further on down the track and people just don't have all the records of. We've got our agent rental statements, council rates, insurance, strata fees, all of those types of things. And then also even the bank statement showing the payment and receipts. So keeping the records for the life of the property plus 5 years after you sell, when you complete that tax return is kind of the key, because capital gains tax assessments often happen years later, and you'll need the full cost base to record and calculate that gain correctly. So basically, while you've got the asset, you need to keep all of that documentation plus 5 years after you do the actual tax return where that gain or loss was. I mean, use cloud storage, use digital copies, scan everything, automate it as much as possible. The ATO does accept digital copies and scans, so there's no excuse for lost paperwork in 2025. In fact, because of this, I would just recommend that you just keep them forever. Keep copies in multiple places, and then there's going to be no issues. Step 2 is lodge on time. So painfully simple, yet a lot of people stuff this up. So just lodge on time every time. Late lodgements are one of the biggest red flags you can kind of wave in front of the ATO. And this is because when you lodge late, the ATO assumes you might be hiding something, you might be trying to avoid payment, you've got undeclared income, and late lodgement penalties also start immediately as well. So make sure you lodge on time. And if you're running a business, late lodgement exposes directors to direct penalty notices. So this is potentially making those people directly liable or personally liable for any unpaid company tax debts. So that's PAYG withholding, GST, and superannuation. But even if you can't pay, still lodge. And the ATO is much more willing to negotiate payment arrangements with taxpayers who are kind of transparent and up to date with their lodgements. If you're not up to date with your lodgements, they're not going to negotiate with you. So don't ignore the problem because it only compounds. And step 3 is be transparent and keep your records. So the ATO, they don't expect perfection, but they do expect you to be honest in how you're dealing with them. So making sure you declare all of your income, whether that be rental or investment income, overseas income, business income from side hustles or cryptocurrency trading, not claiming deductions you know you're not entitled to. And I mean, as far as playing in the grey zone, because you and your mates were told something at a barbecue one time, I mean, the best advice is to get advice. So make sure you speak to your professional about what you can and can't claim. And if you discover a mistake, whether that be something that you've omitted, whether that be income or even a deduction, you can fix it. You've got up to 2 years as an individual to amend your return, so you can always go back. There's also voluntary disclosures. If you were to get an audit, you do have the opportunity very briefly to provide a voluntary disclosure, and these are treated far more favourably than deliberately omitting something. So the ATO is surprisingly fair to taxpayers who are upfront and proactive. It's just when you start playing those games and then getting crushed with penalties. Now, what if you do get audits? So I guess the quick reality is audits can still happen even if you do everything right. So sometimes you can get caught in a random data match check for whatever reason. And if this happens, don't panic. Just make sure you get your records together, engage with your accountant immediately, and make sure that you kind of cooperate with the ATO professionally to make sure that so I guess that communication is open and transparent. So in most audits, if you've got all your records and you've got all the explanations, that can be resolved super quickly. Where people do get into trouble is when they sort of delay providing documents, get really defensive or evasive, and provide incomplete or conflicting information. So rule of thumb, the faster you respond, the cheaper and simpler and less stressful the process usually is. And I guess let's quickly run through what happens if you don't follow these steps. So ignoring these can cost you far more than tax alone. So it can cost time. So dealing with disputes, paperwork, and audits for months or even years can cost you money and interest, penalties, and legal fees. And then also your sanity. There's the stress, sleepless nights, and anxiety. And just keeping a note, the ATO do charge general interest charges. So that's currently around sort of 11%. And there's also administrative penalties as well if you get it wrong, of up to 75% of the shortfall. So we've seen clients with relatively minor errors of $10,000 or so over the years compound with penalties and interest and balloon out to double or even triple. this size. So it's far cheaper to keep your house in order from day one. So quickly recap, I guess the ATO has got more data than ever. They're not targeting you, but their system will flag issues automatically. And most audits are triggered by simple inconsistencies, not necessarily criminal behavior. So the easiest way to avoid the ATO attention is to follow the 3 steps. Keep clean records, lodge on time, be transparent if you're required during an audit. And if you do that, you're 90% of the way to being completely audit proof. So, and if you're not sure whether your records are complete or your affairs are fully up to date, that's exactly why you've got a team of professionals on hand. So book a review, get ahead of the issues before they become problems, and you'll be focusing on what really matters, and that's building your wealth, safety, and doing that confidently. So thanks, everyone. Until next time, talk to you soon. See ya.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.